that really is what infinite banking is all about. It's not about a policy, it's about a practice, right? So I think it's really important to understand that the difference between a policy and a practice is implementation, right? I could get you and design for you the best policy in the world, but if you don't implement it properly, if you don't utilize and leverage that policy properly in your life to accomplish your objectives that you're set out for yourself, then that banking policy does absolutely nothing for you. Hey, what's going on, cash flow hackers? It is Chris with Life 180, and for this video, I want to talk to you about infinite banking and specifically get into what is infinite banking and can you utilize Index Universal Life for infinite banking. Now, before I go there, I think it's important to do a little housekeeping and talk about just conceptually what is infinite banking, because what I find in my conversations with people is that people really don't understand what infinite banking is. Now, if you don't know this, we have several infinite banking authorized practitioners on the Life 180 team. I myself am not technically an authorized infinite banking practitioner. I want to just be totally transparent and honest about that. That is because I am not actually licensed, right? So as an unlicensed person, I am not able technically to be an authorized infinite banking practitioner. I am personally, just to kind of get this out there, I'm just a student of the industry. I love the industry. I've gone through all the circle of wealth stuff with the money track stuff with Don Blanton, which I think is just as good as the infinite banking concept. Infinite banking has its own school of thought. And the bottom line is, I mean, I could list a couple others, but the bottom line is any of these things, the idea of these concepts is utilizing properly designed whole life insurance policy to be able to have access to capital, store your wealth, access your wealth, leverage your wealth, create the velocity of money, implement Austrian economics, get your money out of the fractional reserve banking system, because that really is what infinite banking is all about. It's not about a policy, it's about a practice, right? So I think it's really important to understand that the difference between a policy and a practice is implementation, right? I could get you and design for you the best policy in the world, but if you don't implement it properly, if you don't utilize and leverage that policy properly in your life to accomplish your objectives that you're set out for yourself, then that banking policy does absolutely nothing for you. It's going to be better still than just keeping your money in a savings account, and I'll give you that. It's going to be effectively a savings account on steroids. But really the power of infinite banking is leverage. It's Austrian economics. It's getting yourself outside of the fractional reserve banking system. It's regaining control, like ultimate control in your financial life, and implementing Austrian economics and rules inside of your life. And that is the main difference of infinite banking compared to somebody like a Circle of Wealth, is that it gets much more into the philosophical mindset of the Austrian economics, right? Like, and the thing that really attracted me to the concept of infinite banking, quite frankly, even before I knew what infinite banking was, when I first got into the industry as an Index Universal Life agent, before I kind of saw the light and turned the corner and got into whole life insurance, before I even did that, I used to write actually a blog on the economy before I joined the industry, right? Before and during the financial crisis, the real estate crisis, and the crash in 2008. And so when I was writing that blog, I used to do a lot of research. Like I read Adam Smith's The Invisible Hand, Hayek's The Theory of Money and Credit, just books of that nature that I would go through, and I'm a total geek about this stuff. And The Creatures from Jekyll Island, if you haven't read that book, you have to read that book. It's one of the best books ever. It's long, it's like a tome, it's huge, but I would totally recommend everybody to read that. So before I even got into this infinite banking concept, I was really drawn and attracted to the idea of capitalism, the idea of free markets, the idea of Austrian economics. And that's the difference between what we're in right now. Not to go on this other tangent, but if you understand the history, we live in this world of Keynesian economics right now, because there was a guy named John Keynes, him and Hayek lived at the same time effectively, and they had this battle of what was the economic system that was going to win out. And unfortunately, Keynes won the battle, and now we have this fractional reserve banking system with an elastic currency, and it's created all sorts of problems. And we're basically kicking the can up the hill to a bigger cliff, and we're going to have to deal with that at some point in time. So, getting on point now and kind of circling back around, the idea of infinite banking has to be leveraging a whole life insurance policy. And the reason I say that is because whole life insurance, I'm going to say a couple rules here that have to be taken into consideration. It's important that it's a whole life policy because whole life has been around, it's been proven, and when you use the right companies, you're talking 120 plus years of dividends that have never been missed. In some cases, these companies have been around 170 years. So think about that. With 170 years of dividend payments that have never been missed, you're talking about a company that was around pre-Civil War, before Abraham Lincoln even was president of the United States. Okay? And during the entire time, pre-Civil War all the way till now, think about that. We've had multiple iterations of United States currency during that time. Probably, I think, 3 different types of currencies between then and now. And yet these companies have never missed a dividend payment. So when I'm like talking to people about the financial stability and soundness and security of a properly structured whole life policy, you're talking about it from the lens of the fact that this is the scenario, right? Like if I'm looking at this and I know I can work with a company that's never missed a dividend payment like that, I'm going to be comfortable. Now, that's important to understand. And the reason I say that is because a lot of people say, well, what happens if the dollar gets devalued? What happens if, like, all these alternatives, if we shift to some sort of crypto currency? What happens if we go to a one world currency, or there's a lot of people, I get a lot of questions from a lot of people with kind of perspectives that are pretty out there, right? But they're not necessarily so out there if you really understand what's going on, right? You realize that almost any alternative is on the table, potentially, depending on how things play out. And so it's nice to know that you have an option to work with companies that their job is to manage risk and to manage those transitions, and they've done it time and time again over 150 to 170 years, right? And so that's really important to understand. Now let's get into the Index Universal Life concept. It's important to understand that Index Universal Life is a really, really new concept, right? These companies that are selling Index Universal Life, just a decade ago, there were less than 20 companies that were selling Index Universal Life in the country. Just 20. Now there are almost, I think, between 60 and 80 companies. I keep reading different numbers on the total there, but let's just say even if it's 60 companies that are selling Index Universal Life now, that's like a 300% growth over the past decade for the amount of companies selling Index Universal Life. That said, they're doing it for a reason. What's happening is Index Universal Life is a way, and I remember talking to the head actuary who created the Index Universal Life policy for the company, the Fortune 1000 company that I used to work with. And he told me straight up that the purpose that they created and the Index Universal Life and were pivoting their entire business, because they were a big mutual whole life company before they pivoted. The reason that they pivoted back then to whole life, or to Index Universal Life away from whole life insurance, was because they were looking to shift the risk from the insurance company to the insured. And by shifting that risk, what happens is it creates another profit center. And when you really get into it, and I'll put the playlist up to be able to watch my Index Universal Life training playlist, and you understand all the different ways that Index Universal Life moves, you understand the risks involved with it. So when it comes to infinite banking, there are a lot of people out there. Doug Andrew talks about the fact that I've seen some of his videos that sadly have tens of thousands of views. They talk about the idea that you can utilize infinite banking concept inside of Index Universal Life. And the reality is you can't. It's just not possible, because you can't implement Austrian economics. There's not a history of security and stability and dividends. There's no guarantee at all. In fact, there's more history of Index Universal Life policies lapsing and having problems and not meeting their goals. In fact, the one thing I kind of tell people is, like, look around. There's a great blog out there called Life Product Review. I would say everybody go and read that blog. This guy is a former, I believe he was the former head of product design for MetLife. And this guy is, he's just a genius when it comes to analyzing real data. And you have all these index universal life policies that are being run and with assumed rates in the 6% range, and they're not performing at that. The real performance rate is more in the 4 to 4.5% range. And so expectations are way out of whack. And the problem is when you run them at the 4.5% range, you would say and think that that doesn't sound like it'll be such a bad thing. But then when you take the expense ratios in, the net amount at risk, and how they actually play out, those going from 6.4%, let's say, to 4.5% real return after everything's said and done, it actually has an extremely negative effect on everything. And so when it comes to banking policies, infinite banking policies, you cannot use index universal life. I think it's really important to understand that. I just wanted to create a video just talking to people about that because I've been getting a lot of feedback, a lot of comments, a lot of questions asking, can I use this? Or I have this IUL policy already. Why do I need a whole life policy? I'm here to tell you, if you have an IUL and it's, well, if it's a new IUL, I would personally say, take a look at it. I can get you on the phone with an agent. You could take a look at that policy, see if it makes sense. I'm a big believer, like it may be ugly, it may be uncomfortable, and you may be in the surrender schedule, surrender period right now, and you may be in a position where you have to cut your losses, right? I'm a big believer, never throw good money after bad, right? So if you're in a bad position, these IUL policies have 10 to 15 year surrender schedules most of the time, right? So a lot of the times you get stuck there. That's the other thing is the liquidity doesn't exist the way it needs to exist in an infinite banking policy, right? So you have too much risk, too little liquidity. It's too much of a long-term play, and you're tied into the markets because they're buying options, there's investing. So it goes against all the principles. There's no Austrian economics involved. There's no stability. There's no history of success with these. I always say that 401ks were the greatest failed financial experiment of all time because look at the results that everybody's doing. A lot of people are looking at this as an alternative to 401ks, but the bottom line is all you're doing is getting involved. Instead of the government, you're getting involved with an insurance company, which I guess is a little bit better. But if you know that the policy's designed and the fee structures are designed and positioned so the life insurance company can increase your charges, reduce your cap rates, reduce the performance, all to increase their profitability at any point in time, and that's baked into the contract, they're the one who's protected, you're the one who's exposed, and your financial objectives are never secure if you utilize those as a strategy. And when you get people like Curtis Ray and Doug Andrew and all these people selling these cockamamie strategies on how to do it, it really just twists me up and gets me all fired up. And so honestly, it's great for me because it's a lot of the motivation that gets me going and doing these videos, and that's why I'm doing this video right now. So anyway, I hope you found value in that. If you did, please hit that like button, hit the subscribe if you haven't already, click the bell, that way you get notified every time I launch a new video. Leave a comment in the comment section below if you have any questions at all. I'll do my best to engage with you. But until next video, have a blessed, inspirational day, and we'll talk to you soon. Take care.